All right. So SPX income strategies, this is becoming more and more popular now with so many different expire dates for SPX. What once was, a couple times a week is now every single day. So there's a lot of different types of SPX income strategies that you can utilize, one being 0 DTE and this one being a weekly. So you can put these on weekly and let's just get to it and I'll go through the mechanics of it. If you have a pen and a piece of paper, it's not going to be a whole bunch of notes. In fact, it's pretty easy. And I think a lot of people are surprised how easy this might be. So the trade setup for an SPX broken wing butterfly is that it's an 8-day expire. So on your trade tab, where you identify all the different expire dates, you're going to choose 8 days. So it gives you a little bit of time. And really what we're looking for is to get the credit from the broken wing butterfly. And the whole purpose of doing a broken wing butterfly is to get the credit. So the other one is that they did a back test on this a couple years ago. And while doing the back test, now just to let you know, if anybody out there likes to do back testing is not something that is forward looking. It just, basically gives you support, confluence that, hey, this strategy ends up working. And then, of course, you do your homework and you're trying to find different things that align to see if maybe there's a better day to trade this, etc. But about 8 months ago, when we started to do this in our Discord, we actually ended up having a bull run for, I don't know, about a month and a half straight. And either the market was going sideways or up. And even though we had done this training, there was a couple of us inside the group that said, hey, let's put these on and we'll just rinse and repeat. So we'll put it on as an example. First day coming in, I think our first day was on a Friday. We put it on. By Monday, we had gotten like 75% of the profit and we exited and put a new one on the next day. So that's what I mean by rinse and repeating. So you're in the trade, you have a nice, decent profit, could be 50, could be 80, could be 90. And instead of waiting for the 20% left, what you're going to do is you're going to take your profit off and then you're going to just reset one on. And that ended up working out just fine. In fact, we did about 2 or 3 a week, getting 50+% out of the credit spread or out of this broken wing butterfly spread. And just kept turning that over until the VIX got to a point where it was over 20. So once that fear gauge got up to about 20 is when we stopped doing the broken wing butterflies. So our VIX gauge now has been around 14 and a half for probably a good month. And now that we've kind of met the other trade setups, which the third one is that on a day chart, you're going to be above the 20 MA, moving average on your chart. It could be an EMA, it could be a simple, but just be above the 20. And then your other requirement is that the 10% stop loss of capital required. Now, putting on one of these trades, because they are an income generating strategy, is that you need approximately, for one contract, you're going to probably need about $950 per contract to put one of these on. And your hope is when you go to set this up, that you're going to get approximately 90 to over $1 as a credit. And so really you're making about 5 to 10% a week, depending on what that credit is. So just to let you know, you're going to need about $950 worth of capital. So let's get on. Any questions with the trade setup itself? 8-day expire. The back testing showed Thursday to Thursday, but we did our own forward testing and we were able to rinse and repeat every couple days without an issue. So you can, do your own self-testing with that and then determine if you just want to stay with Thursday to Thursday. The VIX needs to be under 20. The daily chart needs to be above the 20 moving average. And then you're going to make sure that you have a stop loss of 10% of your capital required. And then this is an income trade and it produces about 5 to 10% a week. All right.
There are no questions out there.
No questions. Okay.
Although Matthew did mention when you were talking about back testing.
Oh, what did he have to say?
He mentioned the substantial danger of not realizing you have committed overfit, where you have keyed up your strategy to the past and it won't work in the future. So
exactly. A lot of us, we're data driven, aren't we? And I'm sure you too, Jim, because you do a lot of computer tests. You probably recognize that, back testing is nice. It can give you a kind of a read on, how this thing is going to work in the future, but it doesn't guarantee your results. So oftentimes what we like to do in our group is basically forward test it. In fact, when we created our strategy with the wave, we forward tested that. And typically speaking in trading, if you have like a new tool, you basically the standard is that you're going to actually forward test something. 100 plus trades. It has to be a minimum of 100. And you need to document your results to be able to identify if this strategy is profitable or not, if this indicator works or it doesn't, etc. So very important. And I will let you know that while we did forward test this, we did not do 100. We had about a month and a half. We did a couple handfuls of these and it was fine. I think as long as you keep your risk profile in place, your rules in place, you should be fine. Go ahead.
Now you're getting a couple more questions.
Oh, good. I like it.
I'll do, Matthew asks, is that a standing stop loss order or an alert and cut?
It is an alert. And the reason is because in a broken wing butterfly, you actually have 4 options working. And because you have 4 options, and I'm going to show you that on our platform, but because you have 4 option legs, they are rapidly moving as price is changing. And if you set a hard stop, like a conditional order in there, a stop loss order, it's going to trigger without the price actually being there. So what you want to do is set an alert for that 10%. And that 10% loss is going to change depending on if the stock price goes in your favor and you start, creating income because it's going in your direction in a favorable motion. And so that 10% is going to change. And so that's kind of nice as well, is that, 10% may seem kind of tight in the beginning, but you have 2 or 3 bullish days and believe it or not, you're already in profit and your 10%, now you're thinking about actually taking your trade off. You're not even worried about your 10% because you've created profit. So as time passes, theta is good with this strategy as well as it going in your direction.
Or you get any farther, now you get questions on Zoom. How about that?
Great. I like it.
Kenneth Jackson asks, do you have a script for the RSI to show the value on the chart?
Yes, I do have a label. And if that's on Zoom and you are a Discord subscriber, then yeah, you have that in the TOS unique scripts channel. So just go in there and you'll find a label for not only the VIX, but RSI and some other good ones that I like. Anything else?
VP Man says, what if we invest more? Would it still be 10%?
Yes, 10% of your total capital. So as an example, if the total capital for one contract is $900, let's say, for example, and so you have 2 contracts, that's $1,800. So you're going to take 2% of that capital required, which is the $1,800. And so that would be your stop loss. that you want to keep in mind and set an alert for.
Okay, that does it.
All right, great questions. Oh, so as I go back here, if you don't know, you're just going to go on your trade tab. Now, this is on ThinkorSwim, and we're going to go to a live platform in just a minute. But I just wanted to show you just real quick, right along here shows you the days of expiration. And if you're new, sometimes that's a little confusing. So you're going to want to look for the 8. Now, if for whatever reason the 8 lands on something that says AM, like this one does, what you're going to do is you're going to make sure that you don't use the AM. You'll always use the PM one, which is the one that doesn't say anything on it. So in this example, it says 7 days. You would pick this one instead of this one. But as a matter of fact, it looks like August 19th, which is the 8th day. It's interesting that that's got 7 right there. But you would make sure not to pick the AM. We don't use the AM, we use the PM, which is just the blank one here. All right, so let's see. So what's the criteria when you get into your trade tab and now you want to create this trade? So the first thing you're going to do is you're going to set your platform up to single. And on ThinkorSwim, we have this little spread column. And if you click on this spread column, you're going to see a whole list of different types of strategies. These are just different vehicles that you use in different marketplaces to be able to profit from, different market conditions.
While you're looking there at the calls, Prairie W asks, put butterfly 2 or just calls? Do you always do calls? Do you sometimes do puts?
Oh, that's a great question. So for a broken wing butterfly, just like a credit spread, you actually do a put broken wing butterfly for a bullish position. So if we're above the 20, VIX is lower than 20, and we're going in an upward direction and we're bullish, then we want to get a put butterfly. And if it's the opposite and we're underneath the 20 EMA, then we're going to want to go with a call butterfly. And it's the same with a credit spread if you're selling a credit spread.
Okay, then.
All right. So the first thing we do is we, basically just make sure you have single so that you can actually look at your delta. Now, if you don't have delta on your column, you can just go right over here to, it's funny, I can't get the arrow to go right, but you go right over here and you're able to use the drop-down menu and you can pick delta. And I like using volume open interest in delta because typically speaking, and this is for any option trade, you're going to want at least 100 contracts of either volume or open interest. That just gives you enough, liquidity to get into that trade and then sell that trade quickly. I call it Hotel California, when you don't have a lot of contracts in a position you got into and you're locked in. So even though you want to sell, like your trade's not getting executed and you're like, what the heck happened? So for those of you that are about my age and know that old song by the Eagles, Hotel California, which is one of the better ones, you can check in, but you can't check out. And so I always think about that when I think about you need at least 100 contracts. So the first thing we need to do is go over to the 10 delta. So the 10 delta gives us a probability of approximately 90% that this trade will work out. So everything about the way TOS is set up is, it's about probabilities. And that's where delta comes into play. So if you use these types of statistics, it can help you. But to set up the trade, you need to know where is that 10 delta, and that's why we're here. Now you'll notice that there's 2 10 deltas. And so in this example, you could see that we really don't have a lot of contracts here. So we really want to try to either, go down in the delta, which gives us even more safety, or we go up a little. So you could see here that we have a 12 delta here. So we would do it here as an example in this picture right here, okay? Because I don't see 100 contracts except for right here. So in this example, you would use the 12 delta, but you're going to use something close that has approximately 100. If you wanted to be really safe, you would go right over here to 7. Now, what that does is the safer you get, which means the more far away you get from price, the existing price, then the less credit that you're going to get. So even though this may be a 93% probability that it's going to succeed, you're going to get a less credit than if you were to go to the 12 delta. All right. I hope that makes sense to you. Any questions on that part?
There is a question.
OI stands for open interest.
There's a question. Matthew asks, dumb question, don't you need to check the open interest at every strike that would be involved in the trade?
No, I actually, that's a great question, by the way. No, you really want to look at the strike that is your short strike. And that would be the one that you're pinning in the middle. So whenever, I ask people like, when they have a butterfly or multiple legs in a strategy, it's like, what's your pinning strike? Because your pinning strike is the one that you're basically forming around this trade. And so in this scenario, we're forming that 10 delta, or in this case, that 12 delta. So no, if you have volume in that 10 delta, you should be fine in everything else. It's that selling of the option that's important, because that's the one that's most at risk to your capital. So that's why we concentrate on that pinning strike, which is the 10 delta.
Yeah, that's the one you've really got to get rid of when things go bad.
There you go. Exactly, Jim. That's a great way to describe it. When things go bad and you got to get the heck out of that position, the other legs in that position is not going to be a problem. It's the ones that you're selling. Those are the dangerous ones that you want to make sure that you can offload quickly. And that is the one that we're concentrating on in this trade. That's our pinning strike. Great questions. Gosh, it's a good one. All right. So now we're going to create the trade, right? So we now know which, delta we're picking. In this example here, we're picking the 39.50. You could see how old this was. This is approximately a year old. I was teaching this a long time ago. So this was 39.50. And that was the pinning strike that we were taking. And so what we did is we put the 59.50. So we go back to the spread drop down, and we just use the regular butterfly. There's nothing there that's a broken wing. You're just going to use the butterfly. And when you hit the 39.50 and you hit the sell, the buy, you're actually buying this. You can see it, it's in green, you're buying it. When you hit it and it pops up, you're going to make sure that you go 10 above. So you can see that we're at 39.50. So we go a 10 wide spread up. So 39.60. And then you go 20 down. And you can see that it's 39.30. And you can see here that the expiration when I was doing this, the credit when I was doing this training was 65 cents. Now, I will tell you that if you do this, the best time to do it is about 1 hour after the market opens. And the reason is that the market is still active and you're able to get a pretty decent credit. If you do this at the end of the day, your credit may be less. So if you really want to, give yourself an edge, you want to do this about an hour into the day and get a big credit. And that's, by the way, the whole purpose of this strategy is your credit. I'm going to show you what this looks like on a profit graph, but really This trade is really about rinsing and repeating, and you're just looking for that 5 to 10% each week. And you're not, you're not going for the gusto. This type of trade, though, has kind of like a little lotto built into it, to where if there's a black swan event, you may have an opportunity to profit a very large profit. However, the purpose of this trade alone is to get the credit. Okay, and then so once you create your trade, 10 above, 20 below, that is for the put side. On the call side, it's backwards. So on the call side, it's going to be 20 above and 10 below. So please make sure you jot that down in your notes for the call side. 20 above, 10 below. Make sure you put your contracts on. If you ever are in doubt about how much capital you need, once you hit confirm and send, do it slowly. I remember when I was new, I mean, I don't know what it is, but you just go click, click, like you're just automatically doing click, click. Don't do 2 clicks, do 1 click so that you can visually look at where it says how much capital you need for the trade and what's your credit for this trade, so that you know exactly what you're getting into. Any questions about this portion of it? The 10 above, 20 below, and vice versa.
No one's typed anything in yet,
Great.
but I would ask,
Sure.
can you at this point go and look at the Analyze tab and look at this trade before you put it on?
Absolutely.
Okay.
Oh yeah, and I would definitely recommend it because depending on how you are as a trader, I'm a very visual person, and so I'd like to see the trade, how it looks. Where's my 10% at, so that I could create my alert. Like I'm getting kind of detail oriented. So once you start doing these on a every week level, of course your expertise will get better and you won't need to have to go through the steps as much. But using your analyze graph for any trade is beneficial, especially for a new trader.
And Matthew notes, also watch the LOC. Don't know what he means by that. Low, lock, low. Oh,
LOC.
the lock. Oh, the lock. He's talking about the lock on the
Oh,
the
right
little padlock thing. Yeah.
Okay, yeah. Yeah, so so let's say you get a 65 credit as an example. Sometimes I'll submit this and it takes a while. Now I'm going to tell you, because there's 4 legs to this. I know that 3 is only showing because ThinkorSwim makes it easy for you to create a butterfly, but a butterfly is actually 4 legs. You have 2 in the middle and then a wing on each side. So what ends up happening is sometimes you'll submit this and you'll need to wait like a minute or 2. And I know for some of us, we don't have any patience, but this is not the type of trade that, is a scalping trade. So wait a minute. If it doesn't go in for 65, you could go ahead and click it for 64. Now, I will tell you that I'm always leaving this lock open and I submit it. And whatever the best available price is, it will give it to me. If I submit this at 65 with the lock open, sometimes it'll just stay at 65 and it won't even give me an execution. So what ends up happening is that I'll have to lower this to 64 for a credit, because remember, you're getting this in your account right away. So, we have a saying, don't be a dick for a tick. So this is where that kind of comes in. So if you want to, move it down to 64, submit it, 63. But, you want a reasonable amount of credit. I wouldn't start moving this $5 or $10. Then I think that, then you really have to weigh the circumstances. But I typically do not have this issue at all, especially when it's 1 hour into the trading session. But great point about the lock. All right. And so when you click that button, this confirm and send button only one time. And the reason I say that is because oftentimes when I'm doing live teaching on Zoom, people will automatically like click, click, like it's just automatic. And then you don't see, the actual, data that you need to see. So in this example, we have, 5 contracts that we put on, and it gives you the break-even point. It gives you the max profit, and it gives you the max loss. And this is important for you to know what that is. Now, remember that the max profit here, because the broken wing butterfly actually has a lotto built in, that's what that max profit is. It's not your credit. You know what your credit is from the beginning. And in this example right here, it says 70 cents. So if I'm getting a $70 credit times 5 butterflies, right? That is my credit. I got 5 butterflies and I'm getting $70 when I submitted this, $70 per contract. So I'm getting $350 for this. But if for whatever reason there's a black swan event and the stock moves down way down below, passes my 10% limit, kind of gaps down, and you don't have an opportunity to close this out, you will have an opportunity to make that much money because there is a lotto that's built in. So this is great for somebody that just likes a little bit of kind of like an insurance policy, just in case the worst was to happen. There is kind of this built-in butterfly at the very end of the, where your break-even point is. And I'm going to show you that on the graph here in just a second. Okay, and you can do the same with credit spreads. So let me get on now to my platform, and then we'll just create one right now with today's data. Any questions, by the way, before I move on to this?
Nothing yet.
Okay, just let me know. So we're on SPX. I have the 20 here. We're above the 20. The VIX is below 20, which is always good. Seems like the VIX is broken this year, though, doesn't it? I mean, it doesn't matter what happens in the market. The VIX is always around 15. It's like, what's the dealio? What happened to this guy? He seems broken. Anyway, so what ends up happening is there's no fear in the market. You're above the 20. We're on a daily chart. And so now we're going to go to our trade tab. And we're going to just look at our trades and say, okay, where is 8 days? So you could see that I have 8 days right here on June 23rd. So when we pick that now, I'm on single, and you can see that when I do the drop-down menu, that there's all these different types of trade vehicles that you could utilize for different types of market environments. So in this one, because it's just income generating, you're on vacation, you don't want to look at it too often. You're not going to be, sitting in front of your screen. You're going to put this on single, and then you're going to come over here, and you're just going to scroll down until you see 10 delta. So here's the 10 right here. And so we have 1,500 contracts here in open interest. Now, because it's after hours, there's not going to be any volume, right, guys? So in the morning, of course, you'll see what the volume is. But as long as we have 100, and you can see, regardless of where we're at on this, we have no problems because it's only 8 days out. And it's SPX, by the way, extremely liquid. So you could see that we could probably take this one right here. It's got the most contracts. That's nice. We say, okay, I'm going to get the 4310. So now you've identified it, 4310. So now you come down here and you just hit the butterfly. And it will automatically, oh, there's a little pause here, sorry. So now we go to the 4310 because we've identified it, and we're going to buy it, and it pops up on your screen. Now, when this pops up, you're going to go 10 above. So we go 4420 and 20 below. Where am I at? 10? What is that, 80? Do I have that right?
85, I think.
85, 95.
No.
No,
90,
80.
90.
Is it 90?
44.10. If you want 20 below, that'd be 43.
43.90. Yes. Okay. So 10 above, we got 44.20 and 43.90. Make sure you have your iPhone out so that you could do the addition and subtraction. We're in trouble.
It's 43.10.
Say it again.
It's 43.10.
No, it's 44.10 in the middle. Can you see that?
The delta of 10 is 43.10 for 8 days out.
Oh, really?
Oh, yeah. That would explain why the credit is the way it is.
Hold on here. Thank you. Is that Jody or Pam?
Yes.
Which one?
Yes, it's Jody.
Jody, thank you. Okay, let's go to, let me start over here, guys. All right, so we're at here. It's 43.10. Thank you so much. Okay, thank you for catching that. Jeez, Louisa. So we go to 43.10. Yeah, if you see that outrageous credit, I didn't even look at that. So you got 43.10 in the middle. We're going to go 10 up. What did we say this was? 42.90? Yes. All right, so we have 20 below and 10 above. So you could see now it's after hours. The credit's not big. This typically is around 60 to $1.10. That's typical that I've seen it. So this is how you would set it up for the put. And of course, if you were to hit confirm and send, it says that, the max loss is 955. So if 955, by the way, is our capital, let me put this on the analyze. I know I'm not $12 on SPX. Sorry, guys, it's a little slow because I have a lot of things working on the computer. There we go. So this is what it looks like. There we go. On a graph. And what this is, and now a butterfly typically looks like, a butterfly body and two wings. So you have this wing, and then this is the broken wing right here. Okay. So this is where you're making your credit. As long as it stays over here, you're fine. And then if there's an event where the market ends up kind of like a black swan event, and this starts going down, and you can see, by the way, guys, if you just look over here, you could see how this thing starts moving, right? So your 10% on this one is, today's the 15th. Let me make sure I have the expiration date in there. Expiration is June 23rd. Always make sure, by the way, you guys have this up here correct. And that's going to be one day after, so that you could really look to see as accurate as possible. So as we're here, if we start to move this way, you can see that, we're going down in price. And as we go down in price, we're losing, our capital. And so 10% of 955 is about $95. And so our break even, let's just say, is right here, 43.63. So that is where, you would click it, see it's 43.63 and set an alert on your chart. Now, as time passes, and as this is grinding, or maybe, gosh, the market's gone up 100 points, in a week, right? So if this just keeps grinding up, you're going to be making capital here. And as time passes, you're going to be collecting capital as well on theta. Now, you could see that the body of the butterfly is here, and this is the, black swan event. Black swan event happens, and as you come down here, you have an opportunity to make that max profit. But really, we're just hoping to stay here and to collect our credit and do a rinse and repeat, every 3-4 days. If the market's really slow and just grinding and staying still as an example, then you'll probably end up waiting that entire week and maybe just having it expire out of the money. You got your credit. You don't even need to close it. You're done. But if there's a black swan event and you end up past your 10%, right? It gaps down. That's the only way that you're not going to be able to close that out. It gaps down overnight. You wake up, it's over here. You're already at 145 as a negative. And then you're thinking, well, gosh, if it ends up going lower, I may have an opportunity. If it kind of just grinds and stays here for 4 or 5 days, you can see that if you look right here, you could see what your price is today, what your loss or your profit is versus on expiration day. So if this ends up going down here and you're losing 165 and you're like, well, I could either close it out now, or I can see if it goes down any more and kind of just stays in this area and grinds. I have an opportunity of what? Making $1,000. So that's what that little body of the butterfly does, is it kind of gives you a little lotto ticket if there's an oh gosh moment. Okay.
Although, don't you have to get down to maybe the last day or two before you can actually get profitable in that area?
Yes, you do. Time has to pass, because as you can see, I have my cursor today in there, and it says negative $232 in there. So yeah, you need time. It needs time to just grind around and do nothing over here for, well, this is our theoretical calculator, calendar, excuse me. So let's, move that up a little bit. So now you could see that here's the 20th and here it expires. And so now what was once negative 240 is now kind of around the same, huh? Is it showing that? Oh, this is, I don't think, a good representation of that, actually. Let's do 23. Yeah, that's not a good representation. Well, you know what, though? Maybe it is. Maybe that's interesting that you would let this close out. I don't know. I don't think that's a good representation of theta right here, because theta on the last day, this purple line right here would be all the way up here for you to get that $1,000. So unfortunately, with the analyzed graph, though it does give you a nice visual, I don't think that it's a good representation of price. And of course, you could verify that by calling TDA extension 3 and asking them that about the analyzed graph. Because this purple line on the 23rd, which is the day, by the way, of expire, because you always pick the next day, but on, that's expiring at midnight on the 24th. This purple line would be all the way up here to get that profit. It's never down here. So thank you for that, Jim. I'm glad that you pointed that out.
Okay. And a couple of comments in here.
Yes.
Prairie View mentions it doesn't show intraday theta decay. So that's not showing you any of the decay during the last day.
Oh, perfect. Thank you, Prairie. Appreciate it. Yes, this is, as soon as I see this, I know if we're on the last day, that purple line is going to be all the way up here, guys, because that's your theta decay, is your purple line. And then your blue line is actually the trade itself, if you want a visual.
And Matt mentions, he says, because of the tone of one of the earlier questions, for anyone really new, a capital requirement of $950 does not mean this is suitable for an account with $1,000 in it.
Yeah, I don't think so. I mean, this is not for small accounts of less than $1,000. If you had 5,000 or 10,000, I think that this would easily be available to you. And typically on a small account, you're risking between 10 and 20% of your portfolio value. So that's what you're risking. It doesn't mean that that's what you're giving up. That's your stop loss. So remember, even though we could lose our entire, right? We go all the way on this side, guys. We could lose the entire 960, or we start right here at 256, and that's even on the 23rd. As it keeps going lower, 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 and you don't do anything about it, you could get to 960. Remember, that's our capital requirement. But that doesn't mean that's what we're using for that. Remember, we're just using our 10% right here. So up to you on your mindset on how you want to calculate, your capital requirement for your portfolio. But typically speaking, whenever you sell premium, you're going to want at least, I'd say $10,000 is typically good. If you have at least 5,000, you can do it. But clearly, you're going to want to do one contract at a time until you get very confident with your mechanics of this.
And speaking of mechanics, Bob asks, how do you get price to show up on purple line?
Oh, how do you get the price to show up on the purple line? Well, when you're in a live trade and you go to your analyze graph, you'll be able to see what price is just by being here and then being where price is at. You'll be able to see what your profit and loss is at. So as far as theta is concerned, you'd have to, I think there is here we go right here. I think you can actually set this for theta. I'd have to watch a video. I don't use that very often to see exactly, how much money I'm making on theta on premium.
He was just asking price, and you answered his question. He says,
oh,
okay.
Good. Okay, good. Thank you.
All right.
As I drift off into other topics. All right. Any other questions about that?
Nope.
Okay, so we got the mechanics. We know what we're doing. And so now what I really would like you to do is to get on your simulated account, and an hour into the day when you're done, it's time to leave your computer. I want you to go ahead and try one of these on for your simulated account. So you could actually just practice the mechanics of it so you can get comfortable with it, whether we're above the 20 or below the 20, you could start using it. And remember, on the put side, it's 10 up, 20 below. And for the call side, it's 20 above and 10 below. So please put that in your notes. Let's see, what else can we talk about? Boy, what do you guys think about the market? Geez, Louisa. I mean, I just didn't think that was coming. I just thought it was overdone. But you know what? They say that June, July is supposed to be really good. So I guess we just take advantage of it. And, the nice thing is you have to be, able to identify the market environment and then be able to just kind of be liquid and go with the flow. So I guess we just go with the flow.
You were mentioning how you can often take these off real early. And I didn't put one of these on this morning, but I did do an SPX credit spread this morning, 8 days out.
Oh, you did? Okay.
That was up 40% at the end of the day. I was trying to get out of it, but the market was kind of creeping down and I didn't want to chase it back down. But it
what a great idea. And so
40%.
you did one 8 days out and you were already at 40% profit in one day?
Yep. Well, 40% of, the total available profit.
Yes. No, I mean, that's what we're identifying, right?
Right.
So, yeah, absolutely. So by the way, guys, you could do this on a credit spread, and real quick, same mechanics, right? Same market environment we're talking about and same trade setup. The only thing you're going to do is you're going to go to that single. You're going to identify that 10, like we did, 4310. You're going to use the drop-down menu. You're going to go to vertical. Now you're going to come up here and you're going to say sell the vertical 4310. I think it might be the one above it. Yes. So we're going to do 4310 and you're going to do 10 above. Oh, I did have it right the first time. And this you're going to sell because it's a credit spread. So we're going to be selling the 4310 and we're going to go to 4320 on this. You're going to get a 70. Do I have that right? I don't think so, actually. 4310. Yeah, 4310. And then you're going to go to 4300. You're going to be much safer on this. Is that what you did? Yeah, you're going to go 4310 and 4300 here. Let me just put this on correctly. There we go. So you're going to get a $65 credit. Your total risk amount to this is $935. You could see that it's approximately the same as the broken wing butterfly, but you don't have the lotto at the end of it. Let me put this on an analyze graph so you can take a look at this real quick. So you see how this now is just basically a square. Let me put this in the right direction. Put this on the 15th. There we go. So here's price. And that red line right there is your break even. So each day, and when you start moving away from this red line will get closer and closer and closer. And that's another way, by the way, that you could get that lotto, is if you just leave it on, you'll see that you'll be in a lot of profit, but you'll be closer to the butterfly. It's kind of interesting. But anyway, so as you move forward and you start going up, you start making your credit right here. And the same thing is true on this. You're going to just want to identify your 10% and make sure that you get out at your 10% loss. And that's just you just have to be strategic about your trade plan. If you're not, then, each and every trade will be, it won't be like a business plan. And so when we get into this, we're not gambling. We have kind of our trade plan. We know when we exit, when we stay in, and that just helps you. And even though I know what you're saying. So this time I was willy-nilly and I stayed in and I got lucky and it went for me, and I was able to, even though I was down here and I didn't sell here, and I was able to make some money. But if you do that each and every time, I guarantee you, and you journal your trades, you're going to see that more often than not, when you violate your trade plan, you're actually going to lose more times than you will making it up. And so sometimes you just have to suck it up and take that loss and move on to the next trade. And by the way, that 10% is protecting you. It's protecting you to let you know, hey, look, we might have to do 2 trades to make that up, but 2 trades is nothing comparably to you losing, 3 or 4 times that amount. And if you're silly enough, 10 times that amount. So don't get caught into that. I would definitely want you to be safe and follow your trade plan on risk.
Matthew has a couple of paragraphs here. He says,
like
remember this cost is almost $10 just to open and close this the broken wing butterfly, since you got the 4 strikes.
Not for me. $10 is a lot, Matthew.
He says, if you haven't negotiated commissions on GPA.
Right.
So
yeah, for the new person, right? Brand new person, 2468, yeah, it's going to cost you about $8. If you've been with your brokerage a while, even if you don't trade a ton of money, if you've been there a while, you can negotiate your price. I think early on is a good time just to call and say, hey, look, I heard, what is it? Tradie Works, Tasty
Easy
Trade.
trade.
They're offering, 50 cents a contract or whatever. TDA will match it. So remember that these people want your business, and I would definitely try to negotiate your contracts. But typically speaking, they're, I think on average about 50 cents to maybe $1. If you have $2, it would be worth the call, and just, say, hey, there's other platforms out there that are, way cheaper.
Right.
And by the way, you can use a different platform for your trades and then just be in ThinkorSwim and use their charts. Because I do think that their charts are pretty cool, but I hear TradingView is quickly coming up there with some of their tools, right, Jim?
Yeah, although TradingView, I don't think has much in the way of, I don't think they have anything for options. You really can't, you can't look at a graph like this to my
Oh,
knowledge.
is that right?
I don't think so.
Oh, how interesting. I
There
did
are
not know that.
there are other tools out there that we've talked about. There's Option Strat, which I really like, which does a really nice job of duplicating this graph.
Yes.
And it has the advantage of the slider for time
That's right.
is continuous. You can look at any time of day.
I know, and it's funny, you showed me a trade once, and I was like getting confused. And guys, your platform, your indicators, they're very subjective. It's really about kind of like how your brain works, what you're used to, and don't feel obligated to stay in one platform. Go try them out and see if it works.
Also, Matthew says he thought the real benefit of the broken wing was not the actual lotto, but that later in the trade you can be closer to your short strike without getting stopped out.
That's right.
Because
That's
it lifts up that the purple line, basically.
That's right. And then that's what I was trying to say when I say, when you're in this trade here, the weird thing is like you have a lot of profit, but your break even, you would think your break even goes like this way, but it doesn't. It goes this way. It goes closer to this butterfly. So it is kind of interesting how that works out. But again, you have to experience it to understand it. So I want you to start simulating so you can get a real feel for how this works. And then once you've simulated this several times, at least 10 or 15, 20 of these trades, so you can journal them and figure out like what you did wrong or what you did right. Sometimes it's just the mechanics of it. I think that you'll become more confident and you'll see that this might be a way to generate income without having to be at your computer. One time, a long time ago, I got onto Twitter and, somebody was saying something about secret sauce. And so I looked up, what they were talking about, and it was something like this, or it was a diagonal or a calendar. And they said, you could go on vacation. This is what the rich people do. They go on vacation and they make money. And I just kind of laughed. And I was just like, this is options 101. Like, you could learn how to do a calendar. You can learn how to do a butterfly. You can learn how to, do these things. And these are types of strategies that you can earn income and also, not have to be at your computer and be able to rinse and repeat and make, a decent amount of money, depending on how many contracts you have, of course, once you get comfortable. But this is an option for you. And that's what options give you, is different types of option vehicles to, depending on your circumstance, whether you're working or on vacation or sitting in front of your screen, different types of vehicles that you can, make money with. So I hope this helped you out. And if you have any questions, you can, my description, my contact is in the description below of this video. This will go into the live stream section of my YouTube channel. And I hope this helps.
Yeah. Matt also notes when we were discussing the cost of the trade.
Yes.
The exchange fees for SPX are higher than I suspect what you would pay for doing this, say with SPY. and you can't negotiate those exchange fees. So,
You know,
but
that's Matthew, I think you're speaking from experience, and I don't know how many years of experience that you have as a trader or what they're charging you, but I know that, they were thinking about actually charging a separate fee for SPX for the indices, like, NDX and SPX. And I haven't received those yet. And I don't know if it's just the amount of contracts that I'm using, or, you definitely want to check out your fees, guys. See if this strategy is worth it for you. If it's not, no worries. I totally get it. For someone else, this may work out for them.
one last question from me. Have you ever hit it in the lotto in one of these things?
No, I've never.
Okay.
And in fact, the only time that I use this strategy to hit the lotto, so to speak, is when I actually create a regular butterfly. I love butterfly trades for that specific purpose, because, your reward is literally 10 to 15 times more than what you're putting up to purchase the butterfly. And that would be just a regular butterfly, not a broken wing. So this is specific for, you're basically selling premium on this, and you're looking to get that credit. So just FYI on that. But we do a lot of butterflies in our Discord, and we've had a lot of success with them. But again, it's a different market environment for different types of trades. If you're doing the same trade each and every day and it's not working, one of the reasons is that maybe the market environment is not conducive to the trade that you're putting on, whether it be, straight call or a put, or a credit spread or a debit spread. You kind of have to recognize the environment and then use the trade that's working. As a matter of fact, real quick, I have to tell you, we were range bound here. This is a day chart on the SPX. In our group on a range bound market, gosh, the month of May was awesome, because we were just in a nice identifiable flow here, that we got into this, kind of wave that we could figure out. And we did excellent on credit spreads, on, longs and shorts, and all the different types of vehicles that we were using. And it was just being able to identify that we were range bound and what strategies worked well in range bound. So that's it. We're not in a range bound market anymore, guys. You could see the darkest bands right here identifying consolidation. And whenever you have consolidation, you're going to have expansion or retraction. And here, here we had contraction, consolidation, and then we're going up to accumulation. And then this was incredible from, March all the way to June, literally the end of June, the end of April 30th. And then boom, now we're in accumulation. So this is like, great for this type of strategy, as well as longs and debit spreads. When you have the VIX so low like this, debit spreads are great if you want to limit your risk on a trade, or you don't have a lot of capital. That's a great, trade to put on for small accounts. So in our description, we have our trade tracker that we track all of our trades, and you can kind of get an example of the different types of trades that we've been using, including butterflies, credit spreads, debit spreads. We have some calendars in there, etc. And we identify in that, because we use it as a journal of, what are we doing here? Is this income generating? Is this directional? Is it support and resistance? What is it? And so, momentum trades, if you're using a momentum indicator like the wave or, the MACD, very different than support and resistance. So, knowing these things, in a couple trade vehicles can really help you in your trading. Come visit us. We have a free Discord.
And John Ngato asks, have you ever pinned a butterfly?
Yes. Many times.
How close to the center have you gotten?
Oh, like right on with SPX. as well as, like we've done income generating ones. Those are fun. I mean, you just can't get over that. I have several, videos on my channel in regards to pinning butterflies. You could check them out.
So yeah, the one that I got into a few weeks ago with Amazon, I got up to around the 500% profit.
Awesome. That's
And
awesome.
yeah, but it was hard to get out of that thing. The price was hopping around so much.
Yeah, you know what you have to do, and
You have
I
to
will tell
buy
you
back the
this.
center strikes first, and is what I did.
Oh, that's interesting. So you chopped it up kind of to get out of it.
Yeah, because the price was just jumping around so much, I didn't want to put a market order in on it. And
Oh, so you know what I do is I kind of look at it and see where it's at as far as, where it's jumping from. And then I'll make my price high and put it in there so that it's at least working. Now, once it's working, you can kind of see what the market value is right next to it on your working order tab.
yeah,
Then you can start to negotiate that and see where you're at, because that's the best way on any butterfly to exit, whether you're in profit or not, by the way, is to stick it in there high, stick it in there overpriced so that it's not going to be, exiting. And then you can see what the market value really is there, because it will show you on your working tab, on your monitor tab. And then you can like negotiate that price up or down to be able to capitalize on your profit or try to minimize on your loss.
yeah, that's a way too.
Wow, this hour passed fast. Jim, I really appreciate your help being my co-host today. If you guys don't have any more questions, I hope you have a great night, and we'll see you in the next class. Hopefully we'll have a couple of these free ones. So DM me or email me what interests you, and we'll get another class on for you.
Thank you, Sandy.
Thank you, Jim. Talk to you soon.